starting with the Euro USD, and from the weekly time frame, we can see that recently the prices moved up towards the upper boundary of the range, and they are approaching 1.1376 and 1.1463, which is considered to be a strong resistance area. As we all know, the US dollar has been weakening in the recent trading sessions. So moving on to if also looking in a longer term picture, and let's say that the Euro USD could go above 1.1376 or 1.1463, we could go up to 1.19. However, this is we have to see prices overpassing the strong resistance area that we have mentioned before. And moving on to the daily time frame of the Euro USD, we basically see the same thing actually here. Prices are moving upwards. We have an uptrend. However, we are still in a range. This is a very nice range formulation. So for range traders, this is exactly what they are looking for, to sell at the top of the range. So for range traders, what they have in their mind is that they have good opportunities to short the market and make some profits of it. However, we need to be cautious that the US dollar may keep losing ground, and with the Euro USD going above 1.1371 and or 1.1492, we may see prices rising up to 1.17 in the medium term. And in the intraday, we can see some interesting charting here. So first of all, I want to start from the ECB Mario speech that we had the previous week. And for those that were following the market at that point in time, prices initially went down to 1.0824 because ECB firstly announced that it's cutting the deposit rate and the main rate. But then when Mario spoke, we saw the prices moving up. So because he said that he is not going to take further steps, and we saw the prices going up to 1.1217. And in between ECB and FOMC statement, we saw a falling wedge. Falling wedge is considered to be a bullish pattern. So when this falling wedge gave some initial signal that the Euro USD may continue to higher ground, and after that, of course, the FOMC statement came up, and we saw the US dollar weakness with the prices rising up to 1.1217 again after the FOMC statement. As we know, at the FOMC statement, the economic projections were lowered for the interest rate. The Federal Reserve cut the projection for 4 hike rates in 2016 to 2, and that actually weakened the US dollar. However, the US dollar weakness continued after the FOMC, and we saw the prices rising above the 1.1240 as well yesterday, and then we came up to the resistance of 1.1339. And what is interesting for that is that after big volatile markets, usually we see market going into quiet trading. However, because the US dollar lost a lot of ground, there are some traders taking profits. And if we go to a lower time frame of the Euro USD, we can see that the Euro USD is falling today. The US dollar is recovering some previous ground lost yesterday. And by the time that I was looking this morning, the analysis, the prices were slightly above 1.1292. However, now it's at 1.1258. I believe that we still have some short opportunities here. The prices could go down to 1.1242 and give some small profits for the short sellers. However, I expect the Euro USD to remain weaker, the Euro to remain weaker today, since we had all this move up in the recent days, and I could hold a position down to 1.1210, 1.1220, so I can make some profits of the retracement. However, this is going against the trend and of the intraday trend, and it's a bit of high risk trading. So that's it for the Euro USD. Going to the next one, the cable, the GBP USD. I'm starting from the weekly. We can see here that the GBP USD has bounced up. We see a third bullish candle up, and is moving towards the resistance at 1.4566. So at 1.4566, I consider that as a strong level. We had previous bottoms here, and at the same time, the moving average 20 is approaching. So I will expect some upside limitation at around 1.4566, and I will be very cautious in taking low positions there. In the daily time frame, we can see that the prices actually went above the 1.4440 yesterday and breached as a resistance there. However, this black candle today indicates that this could be a bullish trap, a bull trap. So that increases our short expectations. And at the same time, we see here in the daily something interesting as well. We see that there has been bearish divergence of the MACD. So we see a higher high here. However, that is not verified by the oscillators. And at the same time, if we go to the lower time frame, we see that we have two black candles already. The market has reversed in the intraday, and we have some more bearish expectations. Yesterday we have the Bank of England release. The Bank of England didn't actually change any of the monetary policy. It held the same monetary policy with the official bank rate at 0.5%. The asset purchase facility size remained at £375 billion. However, there has been some negative comments about the risk of Brexit, and I have in my mind that as we approach towards June referendum, we may see a weaker pound, without that meaning that Britain is going to exit from the European Union. And at the same time, if we go to a lower time frame here, we can see that the prices have made reversal in the 15-minute, in the intraday. Prices could move lower and go towards 1.4380. Moving on, we are going to the USD CAD. The USD Canadian is clearly bearish, going down in the weekly. We see 9 black candles here, and at the same time we see a death cross of the moving averages. So this is actually increasing our bearish expectations. However, at 1.2822 we see a strong support level, and that is likely to limit the downside. At the same time, the Canadian has been supported by rising oil prices, by a supportive central bank policy, and at the same time, the lower US dollar has increased the risk appetite in the market, further supporting the Canadian. And let's go to the lower time frame, which is the daily, but we keep in mind that there is a strong support at 1.2822. So in the following weeks, we may see a white candle. It has been a long time that we didn't see a white candle here. In the daily time frame, we can see that the prices are in a downtrend. However, the oscillators, as we see the stochastic here and the MACD, are in oversold area. If we zoom out, we can see that the history of the MACD here is actually at bottoms that we haven't seen for a long time. So this is a signal that we have to take into account. And today for the Canadian, we're expecting some news. There is inflation data. The we have consumer price index release and we have retail sales release. Consumer price index is expected at 0.5%, slightly higher than previous month. And at the same time, the retail sales are expected at 0.6%. They are expected to improve compared to previous month where they were released at 1.6%. And if we go to the lower time frame of the Canadian, the USD Canadian time frame, we see that there is an attempt to go up. However, not like the euro dollar or the GBP USD, who succeeded in making a reversal in the lower time frame. And with that said, we may see a sideways of the USD Canadian up to the news. However, after the news, if we see negative news for the Canadian, this will be supportive for the USD CAD to go up, and by the penetration of 1.3039 resistance, I would expect higher ground towards 1.3108, and I'm saying that looking also to the bullish divergence of the RSI indicator here.
But also, so let's not forget that USD Canadian dollar is highly correlated with the oil prices as well, right? Which I'm going to be commenting in just a bit.
Exactly, yes. So I'm looking forward for the US oil, for the oil analysis as well, for your oil comments.
All right.
One last thing that I want to say is that the US dollar has been falling greatly in the last 2 days, and actually from previous week after ECB. So after this fall, I'm expecting a retrace of the US dollar. So with that, I'm looking for the Euro USD, GBP USD to go down and USD Canadian to go higher. However, this is a bit against the trend, so we need to be cautious at how we set our profit take.
You know one famous saying, right, Adamos? It says when others are taking risks, you need to be cautious. When others are cautious, you need to be taking risks. So that's exactly the time for, I believe, for the crude oil as well as the USD Canadian dollar. It's the time for everyone getting excited that okay, crude oil is bouncing up and yeah, everything is great, perfect. So everyone is taking risks. We need to be cautious thus with the long or crude oil and short US dollar. And let's move on to the final part. Yeah.
Yeah, sure. Actually, yes. Before we move on to your comments, I would like to say that Fidelis Capital Markets again is providing a promotion to participants in the webinar. We are providing professional lower spread accounts to all the participants of the webinars, and you can register an account through FCM Forex website or A to Z Forex website.
On crude oil, I have been telling that it's not quite yet the time to short because it was going up, and I believe the time has arrived. The time that has arrived for shorting the crude oil, but not right now. The level that we will be looking for crude oil is gonna be towards the zero level. Well, towards the zero level, which is $43.10 per barrel, and we are talking about the WTI, the US crude oil. So look for 43.10 level for shorting the crude oil, and from there onwards we will not be looking backwards yet. The initial target that we will have will remain all the way to 38.76 levels, 38.75 level, but that's of course the initial target. There might be even an opportunity for further short opportunities. One thing you have to understand why crude oil is going up. Well, there are two main reasons. First, of course, is because of the fact that US dollar is depreciating. So when the US dollar depreciates, obviously fundamentally, since the crude oil prices are quoted in the US dollar, crude oil prices are expected to appreciate. So that's the first reason. The USD is depreciating. That's the reason why the crude oil is appreciating. Second reason is one silly commentary. According to the global crude oil statistics, there are 800,000 barrels of crude oil missing from the production, and this is quite a significant number. Not maybe groundbreaking, but still a significant number. Some believe that this crude oil could be in China, that China just said that they are not buying, but they bought and relocated the crude oil to China. And some are commenting that this crude oil was never produced. So that's also another point. It might just create a confusion out there in the market that well, there is actually a shortage of production, not overproduction. And if you add that together, that's going to be pushing the crude oil prices a little further, and that's indeed the reason why I'm looking for 43.75 level. It's likely that this level is going to be triggered on Monday, so be cautious when you are trading crude oil, or if you are trading crude oil. And it's going to be getting in line with the USD Canadian short targets that Adamos has just shared, the 28 level that he was mentioning. So if you look also from that perspective as well, since USD Canadian dollar is extremely correlated with the crude oil prices, we will first see the price of the crude oil going up to 43.10 level, then down, first target to 39.55, second target 38.75, and my main initial final target will remain at 35.10 level. So it's in total, well, very well close to $9 of $9 of crude oil price drop that we could expect in the coming weeks. But we have to be cautious and we have to wait for it. So let's move next to the gold. We were discussing that for gold overall the targets will remain bullish, and we said that the main target for gold is standing at 1274, 1276 level. This level has reached yesterday and today, well actually last night and today overall. This is the daily time frame. If you look, we are just $4, $3 from that level that I have been really looking for. But I'm convinced that it is not anymore the time to long crude oil, gold. For one main reason, you can see the level between 1266 and 1276. Just look at the highs of these candles. All of them has shadows at that level. So it tells us that from price action perspective, there is a strong resistance level area on this commodity. Thus, I highly would recommend you all to be cautious. On gold long positions, and only trade long positions for gold if and only if you see the price of the gold breaking above the 1276 level. So unless that's happening, the aim should be bearish, and the bearish target, I've drawn this equidistant channel. Generally, I don't really refer to it, but I think it's a good opportunity. So basically, if you combine the equidistant channel from the lowest low of the valley that we had over here to just the first resistance level, you would see that it creates a channel that the market generally moves on a choppy structure, and that's where we are right now. Thus, the main resistance that we can see is standing at the 1276 level, while the main support is 1239 level. what's the stop loss for crude oil? I believe the stop loss for crude oil could be at 43.35, 43.40 level, because it's generally the level that it might touch and reverse backwards. Shall we wait before shorting gold? Well, you can short the gold right now, but be aware that the market is between support and resistance level. It's not a trend anymore. It's a choppy environment. So whatever you would be entering into would be a short-term entry positioning. Could you please cover why longing gold is not good at the moment? As on the daily trend, it looks like it's bullish. It actually doesn't really look like a bullish for one simple reason. If you understand the price action and you would look at the highs and lows, you can see that, well, treat it as one wave over here. You can see this is one high, this is one low over here, this is another high. This high was higher than the previous high, but the following low, which is over here, is lower than the previous low. So the price action confirms that the market is not really on bullish anymore. And the current high that we are looking at, the yesterday's highest high, is also below the previous high as well. So it's a confirmed denial of the bullish market development and possible, well, trend reversal